Hey guys, welcome back to another video, and today I'm here to talk about an option trading strategy that could make you a lot of money. In this video I'm going to show you how to do it, how it works, and on what stock you're trading the options on, what options you're looking for, and also some back testing, just showing that the option strategy, is proven to work. And then fourth off, I'm going to show you guys what can happen if you consistently stick to the strategy and master it. So without further ado, if you guys do enjoy this video, be sure to like it. Also, subscribe to the channel. We're almost at 160 subscribers. That would be amazing if you guys could smash that like and subscribe button. Appreciate you for watching. Let's get right into it. So what we're going to talk about today is an option trading strategy on SPY. This is the S&P 500 ETF. So the option trading strategy that we're going to talk about today is basically what you're going to want to do is invest at a certain time every day. So let's look at SPY in the last month. So you can see the time frames. These are hours. And if you look deeper, you tend to notice something. There's a lot of days where, let's look at the time frames right here. So if we see 8 a.m., look, the market opened, it kind of dropped a little bit. Around 8 a.m., it's down, it goes up by 9 a.m. And then 8 a.m. again, drops, and then goes up. So there's typically a drop earlier in the morning, and then the S&P continues to rise. These aren't specific times. Let's see. Okay, yeah, they have earlier times now, but let's see. So like right when market opened right here, it dropped. It's called the 7 a.m. drop. Usually around 7, or that's West Coast time 7, so Eastern time 10 o'clock drop. So you can see right here, this one, it's down. Usually, it's going up towards the end of the day. This one right here, and then some days it doesn't happen. Like this one, it didn't happen. So you have to be very careful. You can't force a trade. Like this one, around it would be 7 a.m. for me. You can see 7 to 8, it dropped and then bounced back very quickly. And then we can see right here, 7 to 8, it dropped and then bounced back even harder. So it happened 2 days in a row right here. This day, you can see that at 7, it didn't drop, so don't invest, but you still would have made money. But if it doesn't drop, don't force it. You can't. That's where people tend to lose money with this strategy, is they force it. But this is a pretty solid investing strategy. Even you can see if you invested at 7 a.m., if you bought a call option, you would have made money both of these days as well. It's easier in a bull market for sure. But I can go deeper, but it just doesn't. It doesn't have the times the farther back you go. But if you do look at, there's usually a drop around market open. The S&P usually drops a little bit and then rises towards the end of the day. That's just how, like, look at the drop and then rose towards the end of the day, and then we have, yeah. That's just usually what happens with SPYs. There's a drop when it opens. There's a pretty decent drop. You want to there needs to be a sizable dip in the stock price right when it opens, and then I'd open. Let's use this as an example. So one day I'd open 0 DTE or 1 to 2 day DTE options. So these are 1 day till expiration options. So let's say the stock price did drop a little bit. I'd probably try to get just right outside of the money or just right in the money. You don't need. Theoretically, you're going to be holding this option for maybe an hour, 2 hours, 3 hours. So if you do buy a day out, that's probably better. You don't want the theta to eat up your option if you have a 0 DT. But the calls that you can buy, I'd probably suggest sticking in this range around the price of the option. I wouldn't go too far out. Like once you get towards here, I think the stock has to rise a little bit too much for you to actually, reap the benefits. But if you do go 626, 627, $2 range for a $600 stock, I think, if it rises or drops a little bit, it's kind of going to feel that range. So there is a lot of different options that you could buy for this strategy, but these are some of the easiest ones, I think. And I do want to show you guys what can happen if you successfully master the strategy. So I'd also say that for the strategy, you need to have a stop loss. If you do have a stop loss around 10%, I'd say that's probably a good one, 20%. And then you have a take profit at double that, 40%. Then you're probably going to, if you make out ahead more times than you don't, you only have to win 1 trade for every 2 losses to break even if you stick to those standards. And then once your bankroll increases, let's say you win 3 trades and you lose 4, you still made money. You lost 4 trades, but you won 3. You're still making money because you're risk to reward is 2 to 1. So if I'd say the 20% and 40%, I'd say 40% take profit, 20% stop loss. And you need to stay very true to that. Many people would say the strategy doesn't work, or, oh, I lost money doing this, but that's because you're not sticking true to the stop loss and the take profit, because it's very hard. You can't be an emotional investor and make money trading options. You just can't. If you're at 40% gain and you're like, oh, I think it's going to hit 50%, I'm going to hold it, then you're not following the strategy. You're probably going to lose money, and that's on you. You can't do that. And then if it's at 20% loss and you don't sell and you're like, oh, I think it's going to bounce back, that's just coping, and you're probably not going to make money. You're probably going to expire with a worthless option. So I'd stay very true to this. And the smaller amounts of money that you're trading with, the higher the percentage is going to be. So I mean, you guys can, that's up to you for what percent you want to do your take profit and your stop loss. I'd put it at a 2 to 1 ratio. I don't know what that is for you, but maybe it's 5%. Maybe your, risk tolerance is a little bit lower. Maybe once it drops 5%, you need to, sell it. And then when it gains 10%, you sell it. You put your stop loss and your take profit at those levels. I don't know. But I think that 20 and 40 is a pretty universally safe stop loss and take profit. I think that that's pretty reasonable. So let's say, this one is a compounding investment calculator. So we're going to do the return rate at 40% because that's what you want your take profit to be. And you're probably not going to make money every day. So, you might, if you do follow the strategy correctly, you definitely can, but you're going to get some losing days. You're going to take your stop loss at 20% sometimes. But this is, so let's say that you average out your returns to 30% because you're winning. You're taking more wins than losses, but for every, one win, you're taking or you're breaking even. So 3 wins, 2 losses, you know what I mean? So let's say it averages out to around a 30% gain, and years in this situation are going to be days, which is kind of crazy. But we're not going to do any additional contribution, but we just want to see if we can compound the profits made from trading like this. So if your starting amount is about, let's say you start with $10,000. A lot of people have 10,000 sitting around. Not a lot, but if you're going to trade, that's a good amount. But you can also start with 1,000. So let's do that first. So if you do 1,000, and years are days, remember that because it's compounding, and you're making 30% of that in those 10 days. So this is 10 days. Your $1,000 could turn to 13,785. That's in 10 days. Let's go a month. Let's go 30 days. If you successfully did the strategy for 30 days and kept doubling and doubling and doubling, you'd have $2.6 million. So this is probably not realistic. I'm not going to lie, just to win that consistently. So I'd probably drop it to around a 20% average gain per day just after everything, and then maybe even lower, honestly. But you can see that if you have a higher risk tolerance, you can make a lot more money. This just by dropping this 10%, we went from $200,000 to $2.5 million. So yeah, and then let's say your risk tolerance is even higher and you're coming out on top, it can get really high, 24 million. And then at this point you probably should, start your own hedge fund if you can do that. But it is just very interesting to see, even if you do just get a couple of lucky trades in a row, you can 4x your money. If you do this 5 days, or not even, oh no, not 5 days, my fault. If you have this 30%, you're making that, and in 5 days, you have $4,000 after a $1,000 initial investment. So yeah, there's no reason not to try this strategy, I don't think. There's definitely, if you're not a risky person, I wouldn't do this strategy because it's, the strategy thesis that itself isn't that deep. Yeah, it's really just like hoping that SPY drops and then recovers, which honestly is not that, that's that's not an insane investing thesis. That's not really that impressive to, expect a stock that drops to go back up. But it's more about being disciplined and sticking with your stop loss and your take profit levels. That's what's going to make you or lose you money right there. If you can stick to your stop losses and your take profit, a lot of good things can happen. Like I'm thinking that I'm going to start using the strategy almost daily. Maybe just start off with $100 for me. I have How much money? I have around $23,000 in my portfolio, but if I just take $100, you saw how far that can go. If I just take, and you can't force it. So some days it's not going to happen. So maybe it only happens 10 days out of the month. There's how many trading days are there in a month? 20, about. So let's say it only happens, there's 22 trading days about in a month, but let's say that you only get it 10 days with $1,000, dude. 10x your money. Even more, 13x, but let's say $100. So yeah, I turned that to 1,378. So yeah, this is something that I'm gonna try. I probably will have my take profit and stop loss at 20 and 40, maybe 15 and 30, maybe 10 and 20. I'm not sure yet. It just depends on your risk and your tolerance for risk. And I mean, also you have to have enough money to buy an option of SPY when it drops. But also this strategy does require waking up pretty early, for sure, if you do live on the West Coast. If you live on the East Coast, not as much. But I mean, yeah, you can see like this day it didn't happen. You would have made money. That's just because the market is on such a bull run right now. You would have made money, but the strategy didn't happen this day. It just rose, and then you need to tell yourself, okay, it didn't drop at open. I can't use the strategy today, and that's a hard pill to swallow for some people, but it's just the truth. Like right here, you can see it dropped it open. Okay, let's use the strategy. Quick bounce back. That's easily a 40% return in an option. If you invested right here and then sold it when it hit right here, easily you're making 40% on that. But some people probably held, and that's the thing. Some people probably bought right here, held right here, and then they were like, all right, I think it's going to keep going up. It dropped. They sold it, and then it blew past that. That's just how you lose money or trading options. I mean, I've lost a lot of money trading options in the past. I had an $800 account and blew it up the first time I ever traded options, and it was on stupid earnings plays and things like that. Not smart decisions. But if you do stick to a strategy, like 7 to 8 a.m., this is the drop that it had. Look at that. It is between 7 and 8 a.m. That is when the drop should happen, or East Coast, 10 to 11. So it went from 617 to 616. And then you hold it, and you're not losing money right here. You're probably not between your stop loss or your take profit, and then right here you're at your take profit for sure. So yeah, I mean and then if you never reach either of them, you can't let you'll reach one of them because the option will start losing value towards its expiration. So you will reach one of them for sure, but it's probably the stop loss. If the stock is not rising, that is probably the one you will reach. But then take a look at over here at this day. You see 6 to 7 it rose. So you're not gonna do the strategy. This isn't the day. The stock rose after that. That's just because we're in a bull market. And then same thing over here, 6 to 7 to 8, it just kept rising. And then if you tried to do it from 7 to 8, you're like, oh, I'm gonna do the strategy anyways, even though the stock didn't drop. You would have lost money. SPY stayed flat after that. So yeah, this is a strategy that takes a lot of discipline, and a lot of people that trade options don't have that discipline. So do I think that this is gonna make you the next trillionaire? I don't think so, but I do think that this strategy is pretty basic to understand. Obviously very basic. There's not even any levels or indicators, but yeah, the fact that if you just need to keep your stop loss and your take profit. I know I keep emphasizing that, but you need to keep that consistent, and you also need to stay true to that, because if you don't, then that's when bad things happen. And it's very easy not to. I know you're going to think, oh, I'm going to do that. It's easy. I'm going to just stick to the numbers. It's very easy not to, but you cannot get emotional. That's how you lose money. And yeah, look at, and right now, this is, it just takes a lot of patience investing. All these stocks I've owned for, about a year now, long time. But yeah, I've owned, a lot of these stocks have done good for me, but even Nike just recently recovered. I've owned Nike for a long time, and now I'm just now up 10%, but I've just been patient the whole time and believing in the same thing, and it's bounced back. But yeah, that's pretty much all I have for today. If you guys do want to try out the strategy, comment down below how it went. I do think that it's pretty sound for how simple it is. It's pretty surprisingly simple for how effective it is, because we saw the back testing right there. Every day that it dropped, even when it didn't drop, it went up. So maybe that's not the best back test, but I can promise you guys and assure you that I've used a strategy before and made a little bit of money here and there, but I haven't consistently used it, and I think that I'm probably going to start consistently using it. I think that this is a strategy where I want to try it out and see where it goes. So yeah, guys, if you do enjoy this video, be sure to like it. Also subscribe to the channel. We're almost at 160 subscribers. I'd really appreciate that. And comment down below how this strategy went for you, how you feel about it. If you guys want to see more strategies, there's more like poor man's covered call. I can make a video on that. Those are very good, very lucrative. And yeah, guys, see you in the next one. Thank you for watching. Peace.